Hey guys, welcome to this month's edition of Clemens & Company Chronicles. Today we have a really awesome special guest, Brent Wilson from Silverline Lending. He is by far the best lender I've ever come in contact with in the 8 years that I've been doing this. So we decided to have him on today because we have some questions for him. Because really over the last 18 months or so, interest rates have been on the rise since June of 2022. And, there's a lot that could potentially happen here in 2024. So Brent, thanks for joining us today.
Hey, that was quite an intro. I wasn't expecting that.
And so really we'd love to hear from you. What do you expect interest rates to do this year in 2024?
The timing couldn't be better for that question. Markets can be really volatile. We saw that today, and we've seen that twice already. We saw interest rates dip really quickly in January, come to, I think it was about a 12-month low. And then we saw a jobs report come out in later in January, and immediately rates went right back up. And then today, CPI shows that inflation is not quite under control at all, and the market went crazy. So here we are, we're probably on a 30-year fix back in the 7.5% range. And I wouldn't tell you that I don't think for the rest of the year they're not going to go down, but I think it's going to be later than people originally anticipated. And I think this could be actually good news because purchase season is just starting to heat up. And we know in Michigan, there's a seasonality to the market. And I think this is going to pump the brakes a little bit for some buyers, but those that are most serious are going to have a better opportunity in the months of March, April, May to get the home of their dreams without quite as much competition or having to pay through the nose, 40, 50 grand above ask like we might have seen if rates had continued to go down.
Gotcha. That makes sense.
So could be an opportunity for a lot of people. So
let's assume I'm renting a home, right? I'm looking to buy my first home here in 2024. What would be some loan programs available to me?
Well, I've got a couple of favorites for first-time homebuyers. Depending as a renter, how established your savings account is. That's usually the big challenge is the down payment aspect. And a lot of people, still think you need 10, 20% down. Not the case. For my favorite right now, for renters that are looking to enter the market is probably the One Plus.
Tell us more. It's
a conventional program. It's 3% down. However, the consumer is only responsible for putting 1% down. So on a $300,000 home, for example, that's a $3,000 down payment. The lender is going to pick up a 2% credit and give it towards the down payment for a total of 3%.
Wow. So let me get this right. So if I were to buy a $300,000 home, it's going to be 3% down and you guys cover 2%. So I would only be responsible for 1% down, which is $3,000 on a $300,000 house. That's right?
That's correct. And you're going to get $6,000 in credits to use towards your down payment or closing costs.
That's amazing.
Wow.
Yep.
That's a great deal.
And speaking of renters, a lot of renters rent with somebody else. They have a roommate. My favorite part about that program is you can actually have a roommate in the new home and use that income of renting a room to your friend or, college buddy, your current roommate, maybe move together.
Wow.
And use it for income to help qualify and offset the payment.
That's amazing. Let me ask you, what about a duplex?
Yes.
Does this work with duplexes or triplexes?
So this program does not, specifically with the credits, does not work with a duplex.
Okay.
It's got to be a single family, but we do have a new duplex program.
There you go.
Freddie Mac came out with a 5% down conventional, where typically when you owned a multi-family home, you had to put down a significant down payment. Now you can do a duplex or even up to a 4-unit with a 5% down payment. So you can be a homeowner and a investor at the same time.
Wow. So you could hypothetically buy a quadplex with 4 units, you live in one of them, and buy the other 4, or the total of 4 with only 5% down.
That's correct.
Wow, that's awesome. Really cool loan program.
So I guess the third popular one right now would be the FHA with DPA, that's down payment assistance.
Okay.
And basically, there's no grant, there's no private funded money for the government holding in a secret pot that can run out on you unexpectedly like some of those other programs.
Gotcha.
This is basically an FHA, which is 96.5% on the first loan And then the 3.5% down payment can be financed on a second loan. So essentially you've got two mortgages on the home, but you don't have to come out of pocket. And usually that savings is something that, you know, our first-time home buyer may struggle with.
Yeah.
That makes sense. So it really does sound like if you're renting, now is an amazing time to buy a home.
Phenomenal. Because there's never been a time in the market where it's so crystal clear, like what's going to happen.
Right.
We know that inventory has been a problem for how many years now?
Yeah. Wow.
Quite a few.
Do we see a correction there?
No.
Not immediately. So if rates go down, the only thing that there's going to be more of is buyers. And that means prices are going to go up.
Yep.
So
makes sense.
Competition's going up.
So the time to buy is now.
And with that down payment assistance program, what kind of credit score is needed on something like that?
Actually, we can do as low as 600 on that.
Wow.
Other than that, it's traditional FHA rules.
Wow, that's amazing.
So pretty liberal guidelines as far as, you know, debt to income goes. It's helpful if you have a little bit of money in the bank, even though we're doing down payment assistance typically is a shortage of cash, but a lot of people have a 401k established because they've been working obviously for 2 years. And they don't need to touch the 401k, but to have a little extra money in the bank helps get the client approved.
Gotcha. That
Definitely
makes sense.
increases their chances.
So Brent, say I'm a homeowner and I've lived in the home a long time and I got a great interest rate, but I really want to move. How am I going to be able to move and use that equity in my home without coming up with a lot of money to move in the upfront?
Got it. So there's a couple ways you can do that. And I always like to be prepared for a rainy day. And one thing I suggest anybody with a large amount of equity who's lived there is it's never a bad idea to have a home equity line of credit on your home. And a home equity line of credit is an amazing tool to access your equity, much like a credit card. You can actually, some of them have credit cards attached to them. Most of them come with a checkbook. And you can write checks right off of it. But here's the beauty, like you get approved for a home equity line way before you need it. So you get it like a $100,000 equity line, but you're not paying on $100,000. You're only paying on what you use. So maybe you use 20,000 of that to upgrade the house before you sell it. Now you're making payments on 20,000, but you've got the access. Or maybe you want to move and upgrade your home.
Yeah.
Now you've got access to 100 that you could write a check for and use on the down payment of a new home.
Wow.
But having that in advance is the key. And a lot of people try to think about that option the day before they go to move. And now you've got a trailing home that is no longer going to be your primary residence.
So that's a HELOC loan.
That's a HELOC.
Yeah.
Here's the other option, and here's a great strategy to make this all work, is like, I'm sure if you've lived in a home like that long, you're at a great interest rate. You also have a savings account, right?
Yeah.
At least a little.
Yeah.
So a lot of people want to put 20% down on every home. And I get it, because if you're upgrading, you want to keep that loan balance as low as possible and make sure the payment is manageable, right?
That's right.
So in order to do that, it's kind of a two-step process. Buy the new home using a low down payment that you can still qualify for, maybe 5%, and then take advantage of what's called a recast. So you buy the new home, you put 5% down, right? And you close. You qualified owning your current home. And now you get the home already, you get it listed and you sell it. Now you got your equity, right?
Yeah.
How much equity do you think you have?
200,000.
Okay, so you just bought this $400,000 home with 5% down, and now you've got $200,000 after you sell it. You could write a $100,000 check towards the new mortgage, apply for a recast over the phone, and they will calibrate that payment as if you now have a $300,000 mortgage.
Instead of refinancing, I can just recast
They'll
it.
keep your rate the same, the term of the loan the same, but they will, if you had PMI,
Adjust
they'll
it.
take the PMI off as long as you go below 80% on the recast, and then your payment will come down accordingly.
That's excellent. Really
So
excellent.
it's a great strategy for people in that exact situation. So I think the lesson or the takeaway here is to remember there are many options, and it's all about working with an expert to put together the right strategy for you.
Yeah. So if you'd like more information, you can reach out to Trevor or Colleen, myself. And if you'd like to talk to an expert mortgage person, click on the link below, and Brent would love to help you out from Silverline Lending. Thanks for coming today. We
Appreciate you having me.
Yeah, you're always the best. We love working with you, Brent.
Thanks.
And have a good day.